Somber global mood leads to a decline on the Wall Street. Market slipped today's low with the Nifty, Sensex and Nifty Bank falling almost 1% each. All sectors barring pharma trade in the red.
Fed staying with higher rates for a longer period of time spooks global markets. US 10-year yield hovers close to the 4% mark. Asian markets see cuts. The dollar strengthens on risk aversion.
Fears of an intense heat wave leads to brisk buying in stocks of air conditioner and cooler manufacturers. Met Department says temperatures may remain above normal in central and western India for the next 4 days.
Shree Cements H.M. Bangar tells CNBC-TV18 that costs are likely to fall over the last quarter and volumes are expected to grow 10% in quarter 4, adds that the ACC Ambuja deal was done at a fair valuation.
Tata Power tells CNBC-TV18 that invoking the emergency measure to shore up power supply before peak summer demand is a good and timely move. The company says it is in discussions to sign supplementary power purchase agreements along the lines of Section 11 of the Electricity Act.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu as well as Sonal Putra this afternoon. Well, it's turning out to be a session which is weak courtesy the global markets. We had the US markets which saw one of the worst days in this year, and it seems as though the PMI data from the US really spooked the markets on account of fears that maybe the Fed will not stop in terms of hiking of rates. For our markets, it is the Nifty which is below the 20-day moving average at this point in time. 17,824 is where it's at. It is broad-based weakness. It was just about a couple of the pharma stocks which are holding their head above in the green. But that too, in terms of an index, just a couple of minutes had slipped into the red. The advanced decline ratio is telling of that broad-based weakness, which is currently standing at around 1 to almost 4 on the National Stock Exchange. Watch for a lot of cues. We have the Fed minutes, the RBI MPC minutes, and not to mention F&O expiry this week as well. Hi, guys.
Hey Ekta, hey Mangalam. Well, you spoke about the pharma names. They were at least trying to be in the green right now, but across all the indices, it's a major drag that we are seeing. So all these sectoral indices, they are in the red. Nifty Realty, that is the one which is topping the charts when it comes to declines. So that index is down 2%, and that has been the case with the Realty Index for quite some time now. So that index is at the low point of the day. PSU banking names, metals, which were actually outperformers yesterday, have come in for some profit taking. So definitely global cues, something that is impacting our own markets, but it'll be an important week, as Ekta just mentioned.
It will be an important week. The thing is that, up until now, it was in the absence of the Nifty Bank's performance. We had the IT index, which was doing well for us, but now that's moved lower as well. And so that support has gone away. The other shoe has dropped primarily because of global concerns. So the IT index down almost 0.8%, along with the metals index, which is not doing well. The Nifty Bank's weakness continues. I'm just looking at 3 data points that tell you the story of the day. The first one is the volatility. The India VIX is up 6.5%. Yesterday, it was up around 4%. So in just the last 2 trading sessions, we've seen the gauge of fear increase by almost about 10-odd%. The second thing I'm looking at is the breadth in the market. We have nearly 4 stocks which are declining for every stock which is advancing. The mid-cap index is down by about 1.2%. And the third thing that I'm looking at is the quantum of declines is a lot more. Even as, we have 2,250 stocks which are declining, the average declining, the average decline in all these stocks is almost 5%, whereas the ones which are gaining just about 2, 3, at best 4-odd%. So not only are more stocks falling, more stocks are falling more. So these are the 3 factors that talk about the weakness in the market. In that, I'm looking at one of the stocks today, which is Delivery, which is lower in today's trading session, although the news on the stock is rather positive. Why is it lower? One, because of global weakness, and that hits all these new age companies first. Secondly, the management of Mahindra Logistics told us that e-commerce volumes may perhaps slow down in their rate of growth. And thirdly is this on your screen, 1.2 crore shares, nearly 1.7% equity, worth about 410 crores, changed hands at around 335 rupees, a little below where the stock was trading at. So that adjustment took place because of the large trade. Hopefully, we will get the participants of this deal because of its size, 1.68%. But the positive news is that one of their largest clients, Meesho, which is about 20 to 25% of their volumes, did extremely well. And Macquarie, which has a buy rating with a target of 440 on the stock, believes that, Meesho's 37% growth in the December quarter actually made it second highest in the e-commerce space, pipping Amazon as well, and now it's second only to Flipkart. And in delivery scheme of things, Flipkart is not as important because 80% of Flipkart's logistics is done by eCart, which is owned by their own company. So X of captive logistics, delivery share in the e-commerce space is upwards of 60%, and in that, Meesho is one of its largest clients. So 20 to 25% of their total volumes accounted for in FY22 came from Meesho. That doing well should do well for delivery, but today the stock's down for its own reasons.
Okay, all right. Manglam, thank you for that. That's delivery in focus right now. But cement stocks, they have been gaining in trade since last week, as reports suggest that cement companies have taken a price hike. We caught up with H.M. Bangar, who's the MD at Shree Cement. He expects costs to fall over the last quarter and volumes are expected to grow by 10% in quarter 4. Listen into what he had to say.
Because of the closure of ACC and Ambuja for quite a long time of more than a month or so, still the price were not affected. The prices were flat compared to quarter 3, even before the closure and even after the closure. Only because of the seasonal variance, that is in March to June, good demand is there. So now the ground reality is that the prices should increase because of good demand. In coming year, we are hopeful that our new digital initiatives have taken place, new marketing setup is there, management changes are there. So we expect about 36 million ton in the coming year. It's up to the individuals how aggressive they may be. I think the deal was done at a fair valuation, and it became cheaper because not much public holdings have come back to the promoters. So effectively, the cost was lower than expectation.
Okay, so that's the word coming in from Shree Cement. We need to take a short break. It is a weak market, but there are a lot of stocks which are buzzing around. We'll put the focus on Wockhardt and Prestige Estates once we're back. Stay tuned.
Welcome back. You're still tuned into Halftime Report. While the markets are under pressure and so is the broader market, there are a couple of names which are buzzing around in trade. Wockhardt is one of them after its investor meet. Ekta, what has made the street so excited about Wockhardt?
Well, one of the things, Sonal, is that, they held an investor meet after a long period of time as well. So that's one of the things which has got the stock excited. And the takeaways were positive from the management. So, for example, they said that there are annual savings of around $12 million via the restructuring of the business. The restructuring of the business includes, the fact that they shut down the manufacturing facility in the US, which is Morton Grove. Now, they do have an agreement with Serum for the vaccine manufacturing, which is at their UK facility. They have received £10 million as a contribution of reserving capacity. They have, remember, the agreement consists of 150 million vaccine doses across 15 years. And Serum has identified 2 vaccines. The company plans to manufacture, which is Wockhardt, post-regulatory approvals as well as exhibit batches in the next 8 to 12 months. So maybe we could see some movement on the vaccine front in the next couple of months. Novel antibiotics, which is basically the R&D part of the business. They have Emroc, which is basically an antibiotic which they've launched in the Indian markets. I was just reading a couple of cases where they have used one of their antibiotics, and it has in fact been successful. So it was interesting to read that. For Emroc, they expect approvals in 8 emerging markets in the next 6 to 9 months. WCK-5222 is another antibiotic which is currently under research. They expect it to reach markets in the US, China and India by 2025. Long-term external debt of the company has come down to 608 crores versus over 3,200 crores that it had as a peak in FY17. So there's a huge reduction and improvement in the balance sheet. The company presentation indicates that the promoter is also fully committed in the business. The stock is up 4% today. It's at 200 rupees, but you got to put the fall into context as well. It's down 45% from its 52-week high. So yes, it's gained 4%, but let's see whether it can go back to its old, better days in terms of a stock performance.
All right, Ita, thanks a lot for that. But that's not the only analyst meet that took place. Yesterday, we had Prestige Estates as well. They have a lot of plans for Bombay.
Oh yes, they do, and they have been very aggressive when the Bombay market update comes as well. And this analyst meet actually happened in Mumbai at one of their projects, and big plans that the company has put out as well. They plan to double their overall residential portfolio by FY26. Currently, it's at 13,000 crore rupees. So they're expecting 25% CAGR over next few years to take it to 25,000 crore rupees. Contribution of Bengaluru, which is the key market for them right now, will decline to 40%. And as I said, they are very aggressive in the Mumbai market. That is expected to go up to 20%. Right now, it's 2,500 crore rupees. They plan to take it to 5,000 crore rupees. Not only that, even on the commercial side, they plan to make their lease income 7 times in next 5 years. Their hotel business also is looking at expansion. So they expect to double its hotel business to 3,000 keys by FY27. Now, existing residential pipeline is projected to deliver free cash flows of 20,000 crore rupees because of the strong sales that they've been seeing, and 40% of this money will be utilized to fund the lease and hotel capex. The company says that they are looking at 2,500 to 3,000 crore of capex every year, and because they're talking about such a big number, debt will also increase to levels of 12,000 crore rupees, but it's still in their comfortable net debt to equity ratio as well. Jeffrey says successful Mumbai expansion, it demonstrates its abilities in execution and ambition to scale as well. Now they are awaiting their expansion in the NCR region, where there's already a lot of competition. They have a target price of 560 rupees per share, but they say yes, office demand is weak given the IT slowdown, but Prestige has a diversified portfolio. Motilal Oswal says yes, it's a strong commentary, but they maintain their estimates and remain watchful of the progress on the business development front. Cash flow generation is sufficient for the capex that the company has announced. They have a higher target price at 675 rupees per share versus current market price of 407. So they see a bigger upside here.
Okay, all right, Sonal, thanks very much for that. So a lot more to choose from, especially in the Lower Parel area, because Prestige is coming up with their project just close to our office. But nonetheless, that's on Prestige. That's stock down around 1.6% at this point in time. Time for a break now, but Aditya Agarwal of Invest4Edu will join in with his trading calls on what is a weekday.
Welcome back. You're watching us here on Halftime Report, virtually at the low point of the trade for the indices, 17,650 for the Nifty Bank. Just a shade under 4150. Important to know, in today's trading session, it's not only the weakness of the Nifty Bank, which is not doing well for us. It is no support coming in from the IT index, which is not doing well for us either. As a result of which, while the Nifty has fallen below that 17,600 mark, 17,700 mark, closing in on that 17,650 mark, all those who had written the 17,800 put, hoping for 17,700 to come back as a support, have had to close their positions out. So if you just take a look at it, 23 lakh shares on the 17,800 put have been covered. And why is the 17,800 put? The 17,750 put as well has seen a fair amount of short covering. However, at the same time, that has given bears some fodder to go ahead and write the 17,700 call as well as the 17,800 call. So not only have the supports gone away, on the way up, we are facing a fair amount of resistance as well. The most notable one will be at the 20-day moving average itself, which was proving to be a resistance earlier, a support thereafter, and now again will be a bit of a resistance. Near-term support, however, is 17,600. That's where we're seeing a fair amount of writing. The 17,600 put comes up for you for a premium of around 42 odd rupees. Bulls would like to defend 17,500 to 17,600 on the Nifty itself. For that to happen, the key will be what happens to the Nifty Bank. Now the Nifty Bank has fallen below all its important moving averages. The 200-day moving average is below 40,000, but above that we have the psychological support, which is 40,000, and we have seen a fair amount of 40,000 puts being active out there as well. So if the Nifty bank holds on to 40,000, Bulls would like to defend 17,500 to 17,600 on the Nifty itself. We do have Aditya Agarwal with us to give us his view on what the charts are looking like right now. Aditya?
Morning, good afternoon. Sorry, good afternoon. Clearly, there is a bit of a selling pressure, Manglam, as you pointed out, and on the downside, 17,600 is the immediate support zone, which also happens to be the trend line support. If I join the recent lows, I get a trend line support, which happens to be 17,600. So traders should closely monitor this support level of 17,600, and 17,800 on the upside will now act as a hurdle. The range has suddenly shifted in trade today from 17,800 to 18,000 to now 17,600 to 17,800. the problem area is definitely the banks, where the selling pressure is intense, and 40,100 is somewhere one should closely monitor. If 40,100 breaks on the downside, then Manglam chances are high. Bank Nifty could too slide all the way down to sub 40,000 levels. So overall, I believe there is a bit of a volatility which will pick up after today's selling pressure, which is likely to continue maybe in the coming trading sessions as well.
Okay, Aditya, that point is taken on the financials. The PSU index itself has lost around 15% on a year-to-date basis. Any specific stocks?
Absolutely. Actually, the fact is, last year we had seen a massive outperformance in the PSU index and in the entire basket of PSU banks. Now it's a bit of a consolidation and a correction that we are seeing in the PSU baskets. I believe this will continue for some more time. The large cap names like SBI, Bank of Baroda will see further downside, at least 4 to 5% from here on, and maybe that then it will provide a good opportunity to initiate fresh longs. I don't see a massive selling pressure in PSU baskets, but yes, a bit of a selling pressure will be there for at least a month or so. Having said that, there are pockets where there are opportunities. The first buy call recommendation on my list is Aurobindo Pharma stock. After a massive correction, has now started to form a base and now inching higher. So one can initiate a fresh long positions in Aurobindo Pharma. The pharma space has been a bit of a mixed bag, and I believe Aurobindo Pharma from that pack should outperform from here on. So on the upside, one can look for a target of 500 at least, with a stop loss at 460 on the downside. Cement stocks are correcting, and that is where I believe there's some more pressure which will come. So ACC is something which is looking weak on the charts. It's almost broken down from a trend line support. On the downside, it can test levels of 1700, so one can go ahead and short ACC for a target of 1700 on the downside with a stop loss at 1800 on the upside.
All right, Aditya, thank you so much for joining us. So those are some technical bets as far as market today is concerned. Slip into a short break now. On the other side, Rupesh Shah, who is the Executive Director Corporate Affairs at Symphony, will join us for an outlook on their business in the domestic and the export markets as well. Stay tuned for that.
But in an otherwise weak market, there's just one clutch of stocks which are doing extremely well, and these are the stocks that of companies that make ACs, fans, as well as coolers. One such is Symphony. In fact, not only is it higher today, this week it's up around 7.5%. This month itself, it's up around 18%. So Symphony has been doing well. Why is that? Because you don't need us to tell you, that there are intense heat waves, the fears of more, temperature rises has actually led to brisk buying in stocks of air conditioner and cooler manufacturers. The Met Department, we had them here yesterday. They spoke with us and they said that the temperatures are likely to remain above normal in central and western India for the next 4 days. So to discuss this and the demand trends, we are now joined by Rupesh Shah, who's the Executive Director of Corporate Affairs at Symphony. Thanks a lot, Mr. Shah, for joining in. You know, the third quarter for you was extremely good because of off-season sales. And now as we speak, even at the start of the season or just before the season kicks in, the heat wave has been rather intense. Can you give us a sense of how demand has been over the last 2 weeks for you? How, people piling on inventory in the channel, how have secondary sales been for you?
Thanks for having me. So not only for last 2 weeks, but otherwise, as we have mentioned earlier, there has been excellent traction and demand. And particularly, it seems there is early onset of summer in many parts of the country, and that is further boosting up the demand. And in some parts, even secondary sales, that is the consumer sales, has already begun, which normally otherwise begins from end February or middle of March.
Okay. Mr. Shah, can you quantify the offtake that you've probably seen in the past 2 weeks simply because of this aberration of a heat wave that we've seen? We're just trying to understand the spot in volumes that you might have seen.
That's very difficult to quantify because normally what happens across the trade channels, even otherwise, before summer, they do buy in large quantity. Of course, what we are witnessing, whether it is e-commerce, whether it is large format stores, whether it is RCS, whether it is general trade, etc., all of them are probably preponing the demand. To what extent they are preponing the demand, we are not sure, but there seems to be quite decent traction and demand.
Okay, so decent traction in the domestic business, and that is something that could support quarter four numbers as well. Mr. Shah, last time you had told us that while the domestic business is doing well, international business is seeing a lot of pressure. Has that continued, because quarter four FY22 was aided by US sales? What are the trends that you're seeing right now in this quarter and the coming quarter as well? Do you expect it to revive?
So there is status quo in that respect as far as domestic demand across the products, across the verticals, across the channels. It's doing very well and likely to continue very well. However, in terms of the international market, especially Australia and United States, certainly there are headwinds. And some of the large customers have cut down the demand. But we believe that considering climate change and considering whatever has been experienced last year or otherwise, at the end of the season, that is at the end of summer 23, many of them may run out of the stock, but nothing can be done. So this seems to be a temporary hiccup in international business.
All right, so we presume that, after this temporary hiccup, things will, resume on their firm footing in the international business as well. But let's come back home. Mr. Shah, if you could give us some more color on the demand in Q4 typically. Last quarter, you did domestic sales of almost 200 crores. What are you likely to end Q4 with? If you could give us a broad range. And at the same time, if you could also explain to us how pre-buying works for summer season. I mean, yes, everyone would be stocking up their channels, etc. But if secondary sales, like you said, have picked up, then could you see further orders coming in from all your dealer channels?
Yeah, normally that is what it is expected to follow. And as there has been early pickup, not only in current quarter, but in next quarter also, there can be a positive spillover effect. As far as the performance in current quarter in domestic market is concerned, of course, YOY, in fact, our March 22 quarter was also exceptionally good. But on that, as well as on Q2Q, we are and we have targeted decent growth.
Quantify decent? Could you tell us what decent is according to you, Mr. Shah?
Still about 6 weeks to go, and a lot happens during the weather, and we don't give, and we haven't ever given any specific forecast in terms of the value or percentage. But we do have ambitious target for the March quarter as well as for June quarter.
Okay. Mr. Shah, for the US business, have all of your clients cut back? And do you expect a further scale back? The reason I ask is that, we had the US markets down overnight. People are anticipating that the Fed is going to continue hiking rates. So do you expect further pressure from your clients? You already mentioned that companies or clients such as Home Depot have cut back their orders. Do you expect further increase of cutting back of orders in the US? And for the domestic market, are you in a place or a position to take price hikes simply because of the demand that you're seeing?
So we don't expect now any further change in international demand, because for summer of 23, almost 70% of the confirmed orders have been already supplied and billed, and remaining 30% will be supplied and billed, and they are confirmed orders, and we don't anticipate any change in current quarter. So I think that stands as it is. As far as price increase is concerned, as earlier we have given the guidance, our aspiration is to reach back to pre-COVID high EBITDA margin percentage. So until then, it will be mix of step up price increase, good model mix, and higher realization through new launch of models. As recently we announced, we are the first company in the country and world have launched BLDC air cooler.
Okay. All right, Mr. Shah, it was a pleasure speaking with you. Thank you so much for joining us and making sense of what's really happening on ground. We've been talking about high, rising heat waves, and let's see what the impact on companies like Symphony is. With that, we'll slip into a break now. On the other side, we'll bring you an exclusive conversation with outgoing World Bank President David Malpass.
Welcome back. Well, it's definitely weak for a lot of the financials. All the Bank Nifty constituents are in the red at this point in time. We're seeing losses from the likes of PNB, which is down around 2.3%, IDFC First Bank, Bank of Baroda, all of them showing cuts of anywhere between 1% to close to 2% at this point. So all of the Bank Nifty constituents in the red. The index itself down over 600 points at this point. On a year-to-date basis, the Nifty Bank has lost over 6%. But let's move on. The World Bank President David Malpass recently announced his decision to step down from the helm in June, which is a year before his term expires. During his nearly 4-year stint as the development lender's chief, Malpass had seen World Bank face the challenges of the COVID-19 pandemic and the Russian invasion of Ukraine and a deepening climate crisis. Shireen Ban caught up with the man himself and began by asking him about his decision to step down, along with his experience and learnings at the World Bank.
Shireen, it's been a very busy 4 years, so that's a long time in a job. We've accomplished a lot. We've made progress, and I'm very happy with the setup of this roundtable on debt. There's lots more to be done in that area, in the climate area, in the development challenges. One of the things I do worry about is the developing countries. Many of them are really facing huge challenges from the standpoint of fertilizer, of food, and of the high prices that are going on for energy. But these are issues that the World Bank is deeply engaged in. So my timing is really, we're finishing up a great fiscal year for the World Bank. We've been achieving record levels of lending and of grants to countries. So I'm pleased with the progress. So it's a good time for me personally. I want to look for new challenges, and a good time for the bank.
What new challenges are you exploring?
Well, I really want to have impact on all the issues that I mentioned there, and also be engaged really in some of the global issues. I've expressed the concern about the absorption of capital in the advanced economies. So we know that global growth is really facing some big challenges. So I expect to be engaged with companies and with structures that are really interacting with the global system. So I'm looking forward to that.
Let's talk about the global challenges, and I want to address the issue of growth, but also address the issue of the challenge that central bankers are facing at this point in time. And it's very clear from the data that's coming out from the US that the central banks are going to have to work harder. Now, what do you see as the big side effects of moving from a low for long to a high for longer world?
Yeah, that's a great and a core question. The world has to find a way to get to the answer on inflation quicker than what is happening right now. It looks like a long, drawn-out process. We have to start from the premise that the 0% interest rate was an abnormal situation. That couldn't continue. So the world's moving to a more normal interest rate. But I've been pretty outspoken that the central banks need to look at more tools than just interest rate hikes. The interest rate hikes they affect the demand side of the budget, but of the economy, but they also slow down the supply side, the businesses that can't get capital. I think there's more that could be achieved by central banks in terms of their regulatory policies to make them more business friendly and better risk assessment mechanisms. And I also have the view that the central banks are owning too many bonds. This absorbs capital from all over the world, and I think it is a burden really on growth. So I would like to see a model where the central banks use all of their tools in order to have price stability achieved. One part of this, and I'll just make one more point, currency stability has been an important underpinning of global growth. And so I think there can be more focus on that. I'm here in India, and I've been pleased to see that the rupee has stabilized in recent months. And I think that's an opportunity as well for India to show that it's got a stable financial system that can really support a stable currency and therefore lower inflation.
You know, you talked about India, so that gives me the perfect segue to focus a little bit more about your thoughts as far as the Indian economy is concerned. You know, strong at this point in time, relatively resilient in comparison to the rest of the world. How do you view India today from your perch?
It's a very interesting case because many of the developing countries are having more problems than India in growth. And so it's been refreshing and encouraging to see India come off of COVID. It was a very hard time for the people of India come off of COVID in a way that's allowing them to really recover. So what can be done now is to foster that. I saw the new budget, which is making more investments and reducing subsidies, and so that's a good starting point. It was named Amrit Kal, which is a vision for the future that includes 8% growth. I think that's achievable by India, and India is showing the leadership both in the G20 and in the world community to make good progress. I do think it's really important that the private sector be enabled. That means more space in terms of small businesses and medium-sized businesses. Women in the labor force is a critical part of the growth. More credit. Land reform and agriculture reform these are all challenges that India can face in becoming more competitive in a challenging global environment.
All right, insightful opinion coming in out there from the World Bank chief, stepping down now, but believes that India can go ahead and achieve that Amrit Kal, so to say. Take a short break, come back. We have Manisha Gupta joining in with All Things Commodities.
Welcome back, and joining us on the show now is Ajay Goel. He's director at Shivaji Roller Flour Mills. Ajay, hi, good to have you. And wheat clearly continues to buzz on various levels. To begin with, it's the prices which have come off by nearly 30 to 32% from its all-time highs that we hit in the previous month. As we stand today, we are all looking at the third tranche of open sales of wheat from the government, where the prices have been cut substantially. Just to get a sense on how the prices have moved during these auctions, what was the price on the first tranche? And we stand at 21.50 right now.
That's right. So it's been a downward slide, and a huge slide downward. The government began with 2350X Punjab and MP plus local freight for the destination. Then it became 2350 Pan India. Now it's 2150 Pan India and 2100 for the, or 2125 for the URS variety. So it's been I think like a 500 rupee a ton fall slide in the past 3 or 4 weeks.
Ajay, people who bought and bought quite vigorously in the first tranche clearly are looking at huge losses.
Absolutely. You know, you see, you have a tender that comes in, and immediately the same evening, the next tender is announced, and that is at like 200 rupees or 250 rupees a ton lower. So people who participated in the government tender in the morning lost out that 250 rupees a ton by evening. So it's been a real, you know, what you can call it, time in the past 1 month.
Clearly.
For anybody who participated in the tender.
Oh, yes. Ajay, with the kind of, you know, the prices coming off is one part of it, and the government also has been pushing these prices down. But what is the kind of availability that we are looking at in the spot markets now? Because I remember we talking in the month of October, November, December, you kept telling us that the availability is tight and the price is the reason prices were hitting all-time highs.
So FCI is taking care of sufficient supplies pan-India, and new arrivals, a trickle has also started. That's also aiding, but only in certain parts of Gujarat and small parts of MP. But it's the government supplies that's really coming across everywhere for everybody to take up and pick up.
And the new supplies, even if in small quantities, we do understand have started to come in MP, Gujarat, Maharashtra. Of course, the North India is still looking at supplies coming in maybe in a week, 10 days from now. With the government selling in open market and with the new crop arrivals coming in, what's your sense on the availability, private trade buying and the prices?
So availability is not going to be an issue any longer for the next 2 or 3 months. As far as private trade is concerned, everybody is scared of this market now with such heavy intervention of the government at the last moment when it was least expected. The government saw and sat through the peak without any announcement or without any sale. And at the fag end of the season, when the government comes up so heavily on the sales and prices, private trade is definitely going to consider whether it will be a good idea to stock up wheat and buy wheat. But I'm sure the government support is there to the farmer for the year-round purchase of for their requirement. So I think the government will muster up most of the available quantities that comes into the market.
Oh, well, absolutely. The government stock at 6-year lows, and this is a great time for procurement, which they lost out on in last year. But Ajay, the markets or the trade is also talking about on possibility that we might be looking at wheat prices falling below MSP. How much is the sense on that? And with the way the things are moving, are you guys making any sense on where are the prices headed going forward from here?
So definitely in states where government machinery is not really functional, like say Gujarat or Madhya Pradesh, certain parts of Bihar, you could see prices fall below MSP. But otherwise, Punjab, Haryana, Rajasthan, most of MP, definitely there is very little chance. But of course, there are those stray cases of wheat going below MSP if it's in the rural hinterland and there are no takers, many takers, or there are logistical issues, or particular days when there are no buyers in the market. So that always happens. So it could happen this year also.
Okay, all right. Okay, Ajay and Manisha, thank you so much for taking us through that discussion. So wheat prices, they have fallen from the highs. So that commodity is in focus. Markets too have fallen further. So we have Nifty, which is at the day's low, 210 points gone, and that one. And Nifty Bank is the one which is putting up a lot of pressure here. So we'll keep tracking markets for you. For now, we'll take your leave in this edition of Halftime Report. Business Lunch comes up next.